Ken Fisher's with me. Ken Fisher is the founder and chairman, executive chairman of Fisher Investments. Joins me now. Ken, we've talked before. I'm just looking to quote you. Just the day before the Ukraine war got underway, you said, talking about general economics, the bull market is alive, it will bounce back. Now there is this new factor. What's happening, the breakup of certain supply lines, the greater disruption from Russia, which won't be rejoining us anytime soon. If not exactly holding to that view, how do you adapt it?
I think when you stop and think about it, what I would have said before, I'll say now, this is a correction, not a bear market. War scare is a classic correction format. The only correction format of that has been unusual is not getting a pure V-shaped pattern. But the reality is we've had a lot of war corrections before, and they don't always have, smooth symmetry. This correction so far has been almost to the day today from the peak for the S&P 500 to the exact speed, rate of decline, and duration of the median bear market correction, since 1928.
Right.
It's almost archetypal in that way. I think these are all real features. They're all bad features, but whether you consider the Korean War, the 6-day, Hezbollah, you can go through so many regional wars. They've typically associated with corrections. The only war that's actually ever gone to bear market was in times when we've had accurate stock market data was World War II, which was fully global, and I don't think this war goes fully global.
Right, but does it concern you? The new wrinkle, if you like, is the increased sanctions at the same time as a country that was integrated to a large extent, Russia and Ukraine. Who knows? I mean, and by the way, my questions are, of course, absent an exogenous event that sends it all in a completely different direction. I'm talking about if things continue as they are.
So, I am less of a believer in the sanctity of sanctions than most people. I believe economic realities of black market and countries ready to trade with pariah countries is stronger than most people normally think. I can't find an example where sanctions have actually deterred a despot from being despotic and continuing the way they've been, whether it was Fidel Castro or Kim Jong-un or this one, as you say, creates more dislocations, and that's bad. That's for sure bad. But the fact of the matter is I seriously doubt this alters anything that Putin wants to do. And I never thought Putin was as stupid as he appears to be.
Right.
Because none of this is actually going very well for him.
Okay, now if we look at, just straightforward investments and markets and the way things are. Now, we look at prices. They've come down dramatically, 60, 70% for some good quality companies that you and I could argue were overpriced at the top. There comes a point when you say, at these prices, they're worth nibbling. But is it worth nibbling now?
Well, again, this is a correction. It's actually not as big yet as it might get. Some corrections, get up to 20%. This is one big, scary story augmented by a few others. It's got that classic part of a correction where people want to extrapolate off to things like what happens if China invades Taiwan and what happens if Iran goes in the in the Middle East. The fact is all that kind of extrapolation is bullish longer term, but in the short term, the market can go lower, and it may well. Corrections are not predictable in those ways. Anybody that thinks they can time them is fooling themselves. But corrections have always been rewarding with patience. So nibbling, well, stock by stock, time by time, sure. When we look down the road, this will have been a rewarding time. It's just painful and annoying right now. If you're looking for comfort, the stock market's a very expensive place to look for it.
And I think if I'm trying to sort of distill you basically down to a sentence or five, which is that in 5 years' time, things should be considerably better than they look now in terms of investment returns.
Corrections lead to new all-time highs. We've had 59 of them since S&P data began well in 1925. The fact of the matter is this creates the next, if you will, sentiment base.
Even though it's from a war, Ken, even though it's from a
We have had a
war.
lot of,
Go ahead.
Richard, you're the best. And the fact of the matter is you still know, but we don't think about, we've had a lot of regional wars. As long as this war doesn't go global, yes.